5, 4, 3, 2, 1. What's up, everybody? Welcome back to Trades and Gains. I'm your host, Max Pitts, and you are back in the earnings corner where we sit and give you no BS, no bias, just facts about what to expect from some of your favorite companies' earnings reports. And, well, it's Nvidia earnings week this week, so guess what? It means we have two things. The entire stock market is basically in a Nvidia ETF, and half of Wall Street is one whisper away from either generational wealth or having to go to therapy and be taken care of in a home. Nvidia reports fiscal Q4 full year 2026 on Wednesday after the close. And let's be honest, this isn't just another earnings report. This is the AI Super Bowl, except this might be a little more exciting than the actual Super Bowl we saw this year. Because at this point, Nvidia isn't just a company, it's a monetary policy that wears a leather jacket and shows cool robots at GTC. So here's what the street is expecting, and this is the setup. Revenue is expected to be between 65 and 66 billion. It's up about 66 to 68% year over year. Adjusted EPS is expected to come in at $1.50 to $1.53, up roughly about 70% year over year. Now let that sink in. This is a company doing 65 billion with a B a quarter. Last year's Q4 revenue was 39.3 billion, EPS was 89 cents, and data center was 35.6 billion, with gross margins sitting at about 73 to 74%. And as Drake would say, started from the bottom and now we're here. Wall Street has revised estimates higher multiples. Okay, 65 billion per 3 months, 30 billion per month. Thank you, Jeff, for that correction in the chat for that. Now, Wall Street has revised estimates higher multiple times in the last month. Translation, the bar isn't high, it's orbiting Jupiter. And when expectations get this condition to beat and raise, the real risk isn't bad numbers, it's good numbers that, well, just aren't insane enough. It would be kind of like when Palantir first started popping and Alex Karp would have to literally pull a unicorn out of his butt in order to get investors excited. But here's the thing. This isn't about the quarter. It's about AI capex machines and whether the hyperscalers are still feeding like it's Thanksgiving. So let's go ahead and stop pretending and take the condom off. Nvidia is basically a leverage bet on hyperscaler AI spending. About 90% of income ties back to the data center segment. That's not diversification, that's concentration with a ton of confidence. What we need to hear, data center revenue is still growing faster than the company. Hyperscaler AI capex guides raising for 2026. Order visibility for Blackwell, H200, and the Rubin ecosystem, and no signs of digestion or pushouts. Because here's the fear creeping in. Peak AI in 2026. In Wall Street, they don't fear recessions anymore, unfortunately. They fear digestion. If hyperscalers say, hey, we're pausing for efficiency, this stock doesn't dip, it recalculates. But if Nvidia confirms another step function jump in data center and says AI capex is still ramping, well then the AI supercycle is intact and crowd goes ahead and pops champagne again. We'll see if somebody rents out a bar again this year for Nvidia earnings. I remember they did that in New York last year. So let's talk about the part that nobody likes discussing when the stock's going vertical. Margins, because gravity eventually applies to everyone, even if you are building stuff to defy it. And that goes for you where your favorite leather jacket profits. So we're looking at full year 2025 non-GAAP gross margins at 75.5%, Q4 full year 2025 73.5%, and Street expects full year 2026 margins in the low 70s. Q1 full year 2026 guidance was 71%. That's still elite, but this is what we're watching. Mix shifts. Think full stack systems versus GPUs. Networking, lower margin geographies, and most importantly, competitive pricing pressure. Now here's the key. Wall Street will forgive margin compression if revenue keeps exploding. They will not, however, forgive margin compression if revenue only grows 50-60%, right? Because then you get the whisper, peak profitability. And the second that whisper trends on FinTwit, AI stocks stop being growth darlings and they become valuation case studies at that point. But the real drama isn't in the P&L, it's in the roadmap, if we're being honest. This call is a product checkpoint. And this is, when we're talking about the call, we're talking about the conference call. Blackwell, H200, Vera rack sale, and Rubin integration. If Jensen gets on the call and says, we're seeing massive adoption, customers are ramping, pipeline visibility is hundreds of billions, well, it's time to put your strap on and get in the game, boys. But if he starts using words like optimizing, transition period, customer calibration, that's what we call digestion code. And what did I just say? What does Wall Street hate? Digestion, right? So the street will be listening for early Blackwell shipments, enterprise adoption beyond hyperscalers, sovereign AI demand, and inference versus training mix. Because here's the next evolution of the AI debate. Training is capex heavy and front loaded. Inference is recurring and sticky. If Nvidia can show inference demand scaling, well, that supports the duration of this cycle. If it's still mostly training clusters where people are still trying to build their own, well, the bear case says this is front-loaded build-out. And front-loaded build-outs, they eventually slow down no matter how sexy they look in a bikini. Now, let's talk about the stock, because this isn't about fundamentals. This isn't a fundamentals-only situation. This is what we like to call positioning plus psychology. Nvidia is still the clearest AI winner. Wedbush and others keep framing it as the purest AI capex play. Price targets imply a 20% upside from here. Hedge funds were not buyers in Q4, but the stock underperformed the S&P, which means positioning is long, very long, but it's also not euphoric. So these aren't dudes huffing galaxy gas and saying AI to the moon, all right? Options markets are pricing a sizable post-earnings move. This is not a quiet setup. This is the bar is sky high and nobody wants to miss the next leg, which is how you get violent reactions. Because when the narrative is this dominant, even small tonal shifts matter. So let's look at the bull case versus the bear case, okay? Bull case, we see revenue beat 66 billion, EPS beats $1.53, data center accelerates, margins hold the low 70s, Blackwell adoption is strong, and we see a confident guide. A result, well, an AI supercycle narrative extends, skeptics get squeezed out, and the semis will go ahead and rally. On the bear case, we see revenue in line, margins starting to compress, capex digestion hints, and, well, they guide cautiously. This is going to quickly become a great company, but the wrong price. And the reset, it won't just hit Nvidia, it hits the entire AI complex. So let's go ahead, make like a condom, wrap this up. Here's the reality. Nvidia isn't just reporting earnings, it's reporting on the hyperscaler capex cycle, the durability of AI demand, the future of enterprise compute, and the valuation of the entire semiconductor sector. This is less about one quarter and more about whether the AI build-out still has velocity. If Jensen confirms acceleration, well, we go again. If he hints at digestion, welcome to volatility, baby. Either way, Wednesday night is going to be anything but boring, and we will be here to watch it with you. I might not be because I have to go work in a restaurant, but hey, it is what it is. Anyways, come hang out with us over at Free Wi-Fi Radio, over on Twitch at twitch.tv/Free Wi-Fi Radio, and use that code SUPERMAX20 at InvestorCentralClub.com to get 20% off your first month at Investor Central Club, your favorite options flow software. I'll see you guys in the next video. Good luck with Nvidia earnings, and drop in the comments. Are you bullish? Are you bearish? Are you buying calls? Are you going to play the aftershock? How are you going to play Nvidia earnings? And maybe we will do a Nvidia earnings recap to tell you exactly what went down on that conference call. No fluff, no BS, no bias, just the facts. Have a great rest of your day, and I'll see you guys on the stream.